What's happening, guys? Hopefully you had a great weekend. Another Sunday scan here. We have a lot to watch. We have a lot happening, and we have a pretty insane small cap market right now. So I'm pretty excited about next week, but I'm going to take it one name at a time and see what we're able to capture for trades in the week ahead. Midweek, I did a recap on the HEPA trade as well as a few others, the Netflix unwind, and a couple other strategies that have been working right now. This is really an A-plus style setup type market right now. Literally the stocks, the perfect case scenarios, big gap ups, unwinder types, parabolic moves. I mean, it's 5 a day right now. So really it's about taking the best liquidity, the best bang for the buck type plays, being aware of the float on some of these names, and even a higher float has actually been kind of trapping people, right? So most people think they're safe if they're shorting something that's maybe not a million shares now, right? We've had SES, we had BIMI, we had a dozen of other 1 million to 1.2 million style float moves happen, but people are aware of that. People aren't going to get stuck. Sure, some got stuck in SES, but most people are going to be cautious. Most people are not going to be too aggressive, knowing that they are, they're up against a potential big player that could potentially scoop the entire float and squeeze them. So the point here is something like BNGO, where I think it's 3.3 million, something like that. Let's just call it 3 to 5 million. They feel a lot more confident. There's no way that this can really squeeze out. There's no way that this can go 50 cents to $4 and then pull back and then actually do it again. And I think people got fairly confident with some of the amendments, the amendment of the S1, as well as some of the warrant conversation last week. And that gave people the conviction to hold. Gave people the conviction that, well, you know what? All I got to do is just swing this thing short, and it's a no-brainer. At some point they're going to raise, and I might as well stay short. So there's a couple factors that come into that, where you've got a very high borrow cost. You have very high momentum, where the volume on a name like that, on something like SES or BIMI, let's say you feel comfortable shorting 5 or 10,000 shares max. Whereas on something with BNGO, you might feel comfortable shorting 20 to 50,000 shares because of the liquidity, because of the range, because of the share structure compared to something like SES or BIMI. So all of a sudden it starts trading a lot thinner, and it starts holding a lot more than you thought, and you're in trouble. You're in trouble when it starts to hold, when it doesn't break down. So the other note, on Thursday, BNGO just gapped up, and it just was a slow, steady fade. So it trained everybody. Yep, you got it right. You're on the right side of the move. Be patient with it. Let it do its thing. It's done. And all of a sudden, it held off the open. So hopefully you guys saw that. Pre-market, I had tweeted that I feel like the shorts are in a pickle, and they're going to get themselves into more of a pickle. And so it was really just a short, fighting back and forth, cover, reshort, cover, until the point where it was literally likely a buy-in on blowups. It doubled intraday, and although I was not long, I was cautiously short, just kind of dabbling, waiting for that moment for the parabolic move or the 4 stuff. And we had a major stuff at 4, and at which point I felt like it was about to pull back, and I had actually mentioned it, that I felt within 20 minutes we're going to pull back a buck. And even after pull back a buck, I still thought we could potentially go red. So it got almost there. It got about 50 cents or so away, which, considering it was up about 250, that's a pretty big move. But with that said, a really, really big opportunity. The reason I did not want to get long is just like PSTV a couple weeks ago, right? You get long on PSTV, and all of a sudden they do a midday offering, and it goes from 10 to 6 to 4 to 350, and you have no ability to get out for that $6 or so fade, and you're out of luck. So yes, there was a long opportunity there. yeah, it would have been nice to take part in that squeeze, but there's a good chance that I would have gotten pretty confident, knowing and thinking that it was going to squeeze out. Probably would have added. And if anything were to happen, if they ever did do some type of midday offering, I would have been pretty upset with myself because I knew the risk and I did it anyway. So, sure, congrats to those that took it long. But for me, I was just looking for that squeeze out. And like I said, about 2 hours to the close, I did not feel like they were going to be holding. And when I say they, everybody's always like, what do you mean by they? They meaning the players behind it, right? And about 2 hours before it closed, maybe about 3, I said, no matter how high it goes, I just don't expect or anticipate them to hold this thing over into the weekend. And that goes for shorts and for the players themselves. And the reason for the players is because just what we were talking about. There's too much risk to hold overnight, right? If they have millions and millions of shares and all of a sudden they end up doing an offering at 50 cents, or a dollar or whatever, they're losing millions and millions and millions of dollars. Intraday, sure, that risk is less, potentially, arguably, but overnight, over the weekend, that's huge. And on top of that, the borrow cost was huge. So if you're paying overnight fees, which you've got 4 days right there, you've got Friday, Saturday, Sunday, and Monday. If you're going to be holding that over the weekend, so in my opinion, people are not going to be holding, especially if it's starting to go 2 to 3 into the 4s. They're going to be looking for their exits. They're going to want to get out of the name before the weekend because they're not going to want to pay all that extra money. So that was a lot of the thesis behind that call on Friday for that unwind and the trade that I made. I covered all of it, 180s to 190. The worst cover was 190. Best cover was maybe 182 or somewhere around there, something in the 180s. So I was really happy with that trade. It worked out really, really well. ATIS worked out really, really well. The key for me, I've been dabbling in on the front side, and dabbling in is never to be confused with any size whatsoever. The only time that I size into names is after confirmation of a stuff, after confirmation of failed follow-through momentum, and on top of that, I had my friend in here in the office and we were talking about it, shorting the front side and whatnot, and kind of what to look for. And each time we looked at key levels. And so out of the morning, if you were short, if 190s did not start to fail, then you don't want to be short. You don't want to be aggressive. You don't want to fight it because that level should have failed. If it starts to rebuild, now you've got all that short trap out of the open to deal with, and it's going to go to the next level. And then if it doesn't break down at that level, it's going to go to the next level, and so on and so forth. So it's always very important to look left, look at the prior levels of support. When it ramps up and it starts to base, note whether or not it's staying heavy or if it's starting to base at that level. And if it's starting to base at that level, it's okay. You can always get back in. Okay, there's $2, $3 a range on these things. And everybody always wants to get in at the top. Everybody always wants to be, the hero that nailed it. But if you just wait and you save yourself maybe $2 to the upside because you're 20 or 30 cents late. I'd rather be 20 or 30 cents late than be $2 too early on, any size. Of course, I'm going to dabble and get in there and get a feel for it. But as far as any size, I want to be joining the sellers on the way down. And, the problem is even if you're right, if you exhaust yourself on the right side, you're going to be covering for even. You're going to be, not scaling. You're going to be like, oh, thank God I'm out. And you're going to miss the trade altogether. So it's always better, put the brakes on, wait for the trade. With all of that said, I realize that a lot of you guys don't have borrows in these things. And, that's part of the game. That's part of you got to have the right brokers. And, some of you guys aren't going to be able to get those. So I get that. So, you need to be focusing on what you can trade. So if you look at it in the morning and you're like, oh, I'd love to short this, and you're watching it all day, and you're watching it for this trade that you're not even able to take, there's only 2 reasons to do that. 1, proactively, you're watching the tape, you're trying to learn from it. Or 2, you've got this FOMO in your head, you're like, oh, I'm gonna trade it anyway, but you can't. And a lot of people do that. They don't watch it for the point to understand tape and watch with commentary, but they're actually wasting time watching this thing when there's 1 trade, 2 trade, 3 trade, all going Netflix, GIL, and a bunch of other names that were nice and clean. There's another one that I had on scan last night. Was it DERM or something like that? Let's see. Yeah, DERM. A lot of other clean trades, non-small cap momentum type trades that you could be focusing your attention on. So anyway, let's get into scan. But again, if you're not killing it in this market, that's okay. Earnings are right around the corner. We got a ton of earnings this week. So, point being is that might be your thing. I know a lot of great earnings traders, and then I know a lot of guys that are like, I can't trade this crap. As far as momentum names. So know what you're good at, know when to pull back, know when to just watch. When you're trying to get in there, I have a note in the scan tonight, but it's better to feel like you missed out on something than to wish that you had missed out, wish that you weren't in. It's better to wish you were in than wish that you weren't in. And I think that's important because everybody's got that FOMO. I want to be in. I want to be on. Oh man, I shouldn't have chased that. And all of a sudden it comes in, it's pulling back, and you're screwed. So that is the long and the short of it of these momentum caps, the small caps, and how you should be kind of thinking about the trade process. I had I had my best week ever, but that means nothing for Monday. If I go in with a I killed last week, I can't wait to smash this week, I'm gonna give back half of last week's profits. So I have to make sure that I'm grounded. I have to make sure that I am staying safe to my plans. If there isn't a trade off the open, that's okay. I'll sit back, I'll wait. It's okay to wait for 9:45, 10 a.m. for trades to set up. So anyways, let's get into this, and let's talk about some names for tomorrow. So HEPA, this one is a nice little runner that we had the other day. This was a big part of the FOMO. Everybody was chasing it up pre-market. Ended up offering a nice squeeze opportunity and then a unwind opportunity. And you guys can go back and review the tape. I uploaded that for members, as well as I've got Vive, VIVE. I think I have HEPA, and then I have Friday's tape on BNGO, which I will upload into the study groups area. So if you guys are members, go ahead and review that kind of stuff. Go use the calendar feature of the Momentum Chat and the Traders Lounge, where we're kind of calling things out and whatnot, key areas on the tape, and review those spots over and over and over again. So all you got to do is look at the time and sales to kind of match up the comments with the action. So HEPA, being part of all that FOMO type stuff, we had a huge move and then a pullback, and it was actually relatively thin Friday into the close. So just be aware of this. Same thing with VIVE right here into the close. It had a huge rip up. So if you're being patient with these names like SES, where it's pulled back $2 and then another buck and then another buck, as soon as there is a buy-in at a particular clearing firm, you could be part of this huge rip. But with that said, and just like I said on VIVE on Friday, you've got to identify, or at least let it prove, that it is momentum versus just a short cover. So HEPA might have just had one big short cover, VIVE had one big short cover, and a lot of people chase that. They have fear of missing that next breakout. But if you just let it kind of confirm that it's going to base, it'll clear up a lot of things for you. And as you saw with VIVE, it didn't. So it was kind of a false sense of momentum, short-term demand, because it was kind of forced buy-ins, forced covers, and as soon as those kind of started to dwindle down, then bid went to crap and it unwound. So same thing with HEPA to an extent. I want to still be cautious with this. The levels that I wrote in the room or on scan, if it hangs over 360s, I don't want to be shorting it. But higher the better. Hopefully it goes 340s, 360s, and starts to pull back and show signs of weakness, and at which point I would join. These types of backside, I'm not looking to get aggressive with any share size. I want to be okay with the fact that it might swipe up and have a random 50 cents to $1 buy-in. I don't want that to happen, but I think that you should be aware that it can happen, especially if it starts to go, flatline into the close. So be aware of it, and just be prepared for that. So SES, another one that I would love to just continually fade. I do want to watch if it starts to have a trend. All of these, by the way, if they have a PR, I'm also interested in them. I think they can have a first push, a pullback, and a secondary move. The key is just not getting too aggressive too soon on the short side. At some point, it's going to have that fail to follow through, and it's going to fade off, in my opinion. But that doesn't mean you're going to nail it if you're trying to catch the top. They're going to get those people that are, this is an auto short, squeeze them out, and then it's going to pull back. So that's the trade that I want to look for on all of these. But if there are no PRs, higher the better. Hopefully newsletters come in. BIMI on Friday. The only reason this ran is because a newsletter. It started to uptick. Newsletter tried to shove it into a halt. They tried to add and shove it into a halt. And they actually almost slammed it down into a circuit halt on their exit. Because if you think about it, 1,000 people all do the same thing. If it doesn't break out, just like I said last time on the video, where do you think they're going? They're all going to the left side, the bid side. And if there's no bid to take them, it's going to go into a circuit halt. So same thing, BIMI. It's been kind of hanging around. I think it's just working through shorts. This is an expensive borrow. So there was a lot of inventory available, so I hadn't been borrowing it pre like I have on some of these. But we'll see what happens. I'd basically be using 6 as a guide. Higher the better. If 6 keeps on failing, then I'm interested in. BNGO, it did poke back up a little bit after hours. I am hoping that it wants to go back and retest towards this 260 level, which is the VWAP level from Friday. Who knows? I would be equally expecting it to be, $1.80, $1.70 in the morning. So I think a lot of the shorts covered Friday. I think they actually were forced to cover margin, stuff like that. Because it's very easy to get bent up on a couple 100,000 shares. Even 20, 30,000 shares might seem like a relatively small position when you get super, super confident. And all of a sudden it goes $2 against you and, you blow an account. So with that said, higher the better. 250s, 260s is the goal. Failed follow through momentum and looking for an unwind. So we'll see what happens. But more comments in the morning. Again, I will not long this thing. I'm praying for a higher. If it gaps down, I am still watching it. I am still interested in a gap down. Just like SES that day when I shorted it at 17 and 16 when the prior close was 20. A lot of people take things off of radar. And that's one thing that I picked up just from Phil Godecker many years ago, Ozark Trades, where, I have this perfect plan. I want it to gap up, and then I'm going to be interested in the short. And it's because I need that perfect entry. But the reality is that if you were expecting it to pull back, $2, $3, and it's gapping down 50 cents, that doesn't mean it should come off radar. There's still another $2, maybe $3 of downside. So that's one thing that I picked up from, many, many years ago when he was posting and sharing a lot of stuff that, I found myself always taking these things off radar if they opened red. But no, you shouldn't. Because that trade that you were prepared for, there is still a lot of range left. And that's what I want to take opportunity of. So that's that. 230, 250 is goal. 260 is probably the guide that I would use in my head. So basically when I say use something as a guide, I want to be okay with my initial entry or even a couple ads that if it goes to 260, I'm not emotionally involved. A lot of people try to get in there on the front side and they get emotionally involved, meaning they use too much size. So then when it retests, normally things channel. If you look at BNGO on Friday, you'll see it was channeling between basically 240s and 2. And so if you're shorting and sizing into the 2s, then you're going to be covering the 240s. And if you're buying the 240s, then you're probably going to be selling the 2s. So it's really important to recognize the channel that it's trending in, and whether or not you're exhibiting risk towards the bottom end of that channel or the top end, and make sure that you're at least on the right side of that. So, and never have emotions connected to the top of that channel. So BNGO's example, if you're 240 and 2 is your range, and you're gonna freak out at 2 or 240, like 242, 235, then you're trading it wrong. So make sure you always have that buffer. Keep emotions out. ATIS, higher the better. This was fantastic idea Thursday at 135 for the long potential, and ended up ramping up, and then they took it. This is just the market right now. 7 a.m., 8 a.m., they just swipe anything that has a low flow. Everybody's afraid to miss stuff. So this is a great example. I've done a couple videos on looking left to anticipate right. So anytime that I'm shorting, and I will dabble into this, and I will be wrong early, but I want to get a feel for things. But anytime that I'm shorting into this level, I want to be okay with a risk to the left, a risk to this prior resistance. And you can see it went right up into it, and then failed to follow through, and then unwound. So I had posted the chart on Instagram. You can see that one, but I didn't size until the back side. So I had a lot of room, giving myself wiggle room up to this level because I looked left. Looking left is the easiest way to anticipate potential range to make sure that you have zero emotional connection to the trade. Then let it fail to follow through, wait for that stuff move, and as you saw, I had mentioned stuff move, failed follow through momentum, and that's the key for me. And then if it starts to hold after that, you got to be cautious, obviously. But if it stays heavy, then you're good. And so anyway, higher the better here. You can see this range right here. So we're at 160s to about 190s. So in my opinion, if it were to gap up over those levels, 210, anything like that, even 190s, I think it's going to have a little bit of trouble at 190s. So I'd probably want to be part of the resistance and then look for the unwind. If we get a PR, obviously that changes things. Derm was a wild one. This is not one that you want to step in front of, right? It had news, but it's a bigger name. It's not a pump name, and you never really know, how high it can go. But when it starts to go, and starts to parabolic, I'm not going to try to find the top. But as soon as it fails, and it tries to go again, and it confirms, I'll get in there. And that's what I did. As I mentioned in the room, I got short at 830s. Added into the 8s, covered some into the pullback, started to scale around the core, but it didn't really do too much the rest of the day. I was looking for the potential unwind to 680s, so I was covering around the core, reshorting, cover around the core, waiting, and it did nothing. So I went ahead and moved on through midday. SINT, nothing really to look at intraday, but what I like here is the daily chart. So if you guys remember this one, we had traded this one. Again, another big tape style play, kind of anticipating the big move. This was a while back. Saw that buyer, I think it was this day, on the pullback day. Somebody took, I think 16% I have in here. I haven't fact checked that yet, so if you're gonna make a trade based off of that, definitely check the filings. There was a 13G or D or whatever it was, and it was a decent stake. So whatever the case is, you can see it starting to set up on the daily chart. Draw a line across. You can see, basically 3 and 315s is probably your trigger. And then you got blue skies up to prior resistance of 430s. So we're in the right market for something to happen here, but probably either need a PR or a couple million volume. But I like what's happening with the daily chart. I would not want to chase a breakout. This is the type where you chase breakout, it's going to fade off. Chase breakout, fade off. But if you're actually looking at the weakness, red to green, weakness, red to green, that's going to be a better trade in my opinion. GIL. This one was a toughie. I tried it a couple times. Again, no size, front side. You never know where it's going to go, but there was a 28 buyer, and I think there was a 27 buyer. And I was looking for the trade back to VWAP. So the key was I wrote a couple levels that were key for me to scale. I have no problem dabbling on the front side, but the only way that I'm going to scale is if they confirm on the backside, right? So it starts to rip up. I start to look at the areas where it's consolidating, where there's a little bit of a battle, I guess, right? With longs and shorts, where they're soaking, where shorts try, but they fail and it ramps higher. And then they try again, it ramps higher. I take notes of all those levels. So we finally had it, and the level that I wrote in the room was 2750. And so I have no problem with dabbles, 28, but if you're going to be short in 28s, then make sure you're good 2850, 29, plenty of room. So I dabbled and dabbled, and then I scaled in after 2750. Not when it just hit 2750, but when it failed. It tried to come back through 2750 a few times, and it failed. And nice little unwind. 27, I had enough of a padding to not cover yet. My goal was VWAP, and pretty much covered around that level. So you need to take this into consideration, that this might be an area of a magnet. So with that said, if it flushes out a lot, it might come back to this level. If it gaps up over this level, you've got two areas. You got 28, and then you might come all the way back down to 2650s. Or if you're weak and it comes down to 2580s, this prior base here, then there's a good chance that they might want to bring it back up to those 2650s. So usually it starts to kind of hug the levels that it was the prior day if it has a big gap up or a gap down. LB, shorted this parabolic out of the open. That was a game plan from the broadcast. Every morning we do at 9 a.m. on the mic. And so basically looking left to anticipate right. Same thing we discussed before. Shorted into the parabolic. Never enough shares. I probably had about a quarter or a third position. It worked right away, so there wasn't really much to size into. Flushed out and covered. So basically what I'd be looking for is a push up towards VWAP. This level here, 1660s, 1680s, potentially, and then stay heavy. I would bring up Macy's M with it. That's kind of a good one to watch with retail. Just kind of get a feel for what is retail doing today. If Macy's breaking out, then you don't want to probably be short LB. HEYA, not a typical trade for me, but there's sellers there, and I feel like we could potentially be in for a nice unwind if it can't hold this 21 level on the daily chart. So you can see it's been kind of basing here quite a few times, but if it starts to break down, we could start to get red candle, red candle, red candle as everybody starts to stop out. So that, and then the last one, MTCH. You guys should remember this one. This was a fun one on the FTC news. This day it ended up being recovered pretty well. I would say that 70 is a huge number. Drawing a line under here, obviously this day it got recovered. But drawing a line at 70, you can see a base here, a base here, and a base here. And I'm not always concerned at what the low was. I'm concerned at where it closed on the day. So base, 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 and here we are at 70, 71 and change or so, 71.50s. So if it stays heavy, 9:45, 10 a.m. plus, I would use VWAP as the risk. I'd be looking for an unwind. 70, I wouldn't necessarily want to hammer into 70s short. If I was short 71.50s and 71s and kind of adding to a winner, I'd rather be shorting on pops after it cracks 70, after it fails, and then 69.80s become heavy. That to me means, okay, we're staying heavy under 70s this time. That to me shows that, hey, we broke under some serious support. And you can also look back all the way to this level here. You can see that 70 was a big number. So we might be on that backside of the daily move. I mean, it's had a huge, huge, huge run. And it hasn't had too much of a correction. Sure, it's pulled back a lot, but I mean, really, this thing could easily pull back $20 over the next couple months. And, you're right back to, where it was to start the year. So there's a lot of room there. And this one's been a friendly trader. So it's not something that I would potentially size like crazy unless we have an outlier day. Outlier day to me is, earnings, big volume, news, big volume, outside of chart support or resistance. So that to me means under 70 or over, I guess it's 78 or so. So anytime that I am looking to get more aggressive, put on more size, I am looking for it to be under daily chart resistance or support. I don't want to be stuck in the middle of it, because anytime that you start to get aggressive or confident, usually it's like towards the top of that channel, it looks the best, and then all of a sudden it starts to pull back the other way. So that's my game plan for tomorrow. Again, look, small caps are crazy. So if you're having a hard time and you're not nailing all these things, that is okay. The best thing you can do is screen time. Screen time essentially is just taking the commentary, taking the action in, and seeing it. When you see it on these momentum names, that is at such a aggressive level that the stuff that you see on a daily basis is much less intense, and therefore it's going to be a lot easier for you to see it if you've seen it at the most intense it gets, right? So that's my opinion, and if you guys have any questions, reach out. Hopefully you guys have been finding the tweets helpful during the day at key areas. For me, it's about kind of seeing these setups like DTSS where it's going, there's not too much volume, and then all of a sudden you see them turn on this volume mill, and it starts, see 10K, 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 back and forth, back and forth, back and forth. And, in my eyes, they're just trying to create some type of interest. Whether that's shorts and they're trying to trap them and then they're going to squeeze them out, or whether it's trying to generate interest for buys, anticipating the breakout, so they can hopefully get out some. Because at that point, they're probably on the wrong side. So they have too much. They need to basically plant an exit. And it's either going to be by creating enough interest for the breakout or creating enough to trap and then shove them out. So that's what we've seen on a lot of this stuff. HEPA, go back, watch that tape. Anytime something should have died a bunch of times, take note. You can always get back in. That's very important. You can always get back in, especially with no commissions now. You have no excuse. Before, I don't want to lose $5 or $10 on my commission. It costs so much. And then you go and you lose 500 or 1,000 because you were too cheap to take the $5 loss on commissions for flat. So now you don't have an excuse. I know Josh in the office has been trading unbelievably better. Just because he's not worried about, in and out, and he can add a bunch of times. He can size back down a bunch of times. It's kind of like me trading per share, right? And most of the time I'm rebated, but I do a lot of volume, so my commissions are really minimal anyway. But it's kind of, you don't think about commissions when you're trading. So, and if you are, then you're focused on the wrong stuff. You should be focused on the trade at hand. And then if you're making the right moves with trades, the commissions take care of themselves. So that's it. See you in the room. Thank you guys for listening, and as always, leave comments if you have any questions. I try to get back to the majority of them, or all of them, but sometimes I miss some.